So now that we've discussed all of the methods that I currently use or have used in the past, let's put them into use and take a look at a chart, for example. So looking at this chart, we can see multiple resistances from this trend line, and then we're bouncing from the bottom of the key zone. So on this bounce, we have formed now a upper trend line as well as a short-term lower trend line. Now, where would the entry be? Because you would not have known the entry to be here, as this is only the second touch of that short-term trend line. So let's move the chart forward and see where would the most ideal entry and exits be, as you now know a few trend lines. So we'll discuss the chart as the moves is on. Now that we're breaking over the upper part of the key zone, that will be the entry on that day, and we can see follow through on the break. This is a good sign, and there is no reason for exit yet. And the chart continues to move towards that upper trend line that we have seen multiple rejections from. Here's a potential reversal candle. Nothing of a significant concern because there is a huge lower wick. Now this is a big concern because it is a bearish engulfing. Next day, unable to follow through on that bear side, immediately bought up, still trending towards the upper trend line. So the target remains at the upper trend line. Now we're seeing some bear follow through over here. So that would be the exit on this trade. The lower low, and then that would be the entry again on the lower trend line where we have seen previous bounces. No significant concern. There is still some resistance over here that was previously marked, which should not have been there. Lots of sideways action. This is a daily bull flag forming. We're going to need to see that bull break relatively soon. And we're seeing the bull break close above the resistance. Now seeing follow through again. Back test of this previous resistance with a lower wick. Seeing continuation. And this key zone should not be here either. So now we're trending towards the upper trend line, potential sell coming up. This is the part where you take partial profits as the way on the way up. Now this will be another add on the touch of this lower trend line. Breaking over previous resistance, continuation. Still unable to touch that upper trend line. But the chart continues to grind up. Still no reason for exit yet. There we go. That's the exit. We're touching the upper trend line. There can be another 2 or 3 more candles of this trending towards the upper trend line. Just walking alongside the upper trend line. And this is exactly what we're seeing right now. We are at the top of the resistance zone now. Still walking towards the upper trend line. Slowly taking profit. That would be the exit right here. Significant bearish engulfing candle. And now we're seeing significant downside again. Continue to follow through. So our first entry was from here. Our final exit was here, or you could call it, somewhere around here, depending on how you played it. Now we're seeing a bounce on here again, but there's no follow through the next day. Bear break, huge bear break. This is the entry for your bear play over here on the break of this short-term lower trend line. Continuation. That would be the exit on the break above the support. Immediate back test. And now we're back testing this previous lower trend line. That would be a re-entry of the bear play. Now we gotta see a break under here. And we're seeing that break under here. This is another previous resistance. This would be the exit. Multiple resistances on this lower trend line, as well as a bounce once we broke over, back tested. So this would be the exit for bear play on the back test of this trend line again, which is almost at that key zone. Now if you were, as of right now, what you could also do is draw what I would be doing before it gets to over here, would be drawing a fib to see what the levels are at. So depending on how you draw the fib, technically the whole move was from here. It held that 0.5. The 0.5 fib lines up with this trend line where We have seen multiple previous resistance, another two more rejections here before a back test, bounce, and now we're seeing another back test lining up with that 0.5. This would be the exit for the bear play. Looks like it's range bound in the potential wedge forming over here. Nope, and broke bull. That would be a re-entry for bull play on the break of this resistance. Continuation. Let's see what the reaction looks like on the touch of this previous lower trend line. I would personally exit over here around the top of the key zone, just where we saw the previous resistances are. And this is now a spinning top candle. Negated on the next candle. Touch of the lower trend line. This will be the full exit for me on the bull play. Next couple days, nothing really. New highs. This will be an entry on bull play again. You will miss a little bit from here, but we're seeing continuation. So this is a new bull play negating that potential of coming back down. Re-entry of bull play on the break of previous resistance. Another exit over here from this entry because we're at the upper trend line again where we've seen multiple previous rejections. I wouldn't trust this lower wick because there's a significant rejection from the upper trend line. So now potential for a double top, triple top. Trying to break bull, but bear's huge upper wick. This will be the entry for a bear play. Let's see if we lose this lower trend line. That would be the add for the bear play. So unable to lose it. There we go. Boom. That would be the addition for bear play with the exit at the previous support resistance. I'm thinking lower, yeah, lower prices that just showed up. And key zone, previous support, previous resistances, that would be the exit, the final exit. Now looking at potential more choppy action, bullish break. And we already know what's going to happen here now because this is drawn and this is the most recent market as well. So to summarize this up, how do I determine entries and exits? One main thing that is most important for me personally is the confluence zones. So when I look at trend lines, for example, this chart looks messy as hell. And there are so many trend lines everywhere. But when I look at a chart, in order for someone to understand what those trend lines mean, ideally they want to be drawing it themselves. Or having someone explain to them what each of these trend lines, where the reactions are coming in from, why they're being drawn from where they are. So for example, if we were to take at the longer time frame, these longer trend lines, we can see multiple rejections, multiple resistances. And then from there, when we draw the key zones, we can see confluence zones where these upper trend line and the top of the key zone is coming in at. So of course, going forward, we're not going to be looking at the left of the charts. We're going to be looking at the right of the charts. This is exactly why in the current market, just to use as an example, with the way where we are on Friday, that was the buy zone. This multiple trend lines, this was the support area that we're seeing multiple bounces from. Look at these 4 candles holding. And then even if you were to go back, there's not a whole lot of holding, but there's other trend lines that held support. So this is one of them, the bottom of key zone, bottom of a trend line. There's another 4 supports here, another 2 over here, another 1. And until Friday, there is another support. That was the low risk entry. Where you would put your stop then is just under this previous low where you saw resistance and support, as well as below that trend line. The confluence of this is the support resistance is not going to be as strong. So as we move into past this next key zone, I would anticipate it's going to be another new high coming up, or on the loss of this lower trend line, we'll be looking at a confluence zone of probably somewhere over here. So it could look like something like this. A big drop down to the support and then back test the lower trend line before coming back down to that confluence of the key zone plus that GG trend line. So to summarize all of this into how to determine entries and exits, for me, myself personally is finding those confluence using multiple different tools and drawings, whether if it's trend lines, key zones, RSIs, fib, linear regression, EMA, or volume. They all work in conjunction with each other in order to find confluence, in order to find strong zones, in order to find the most likely areas that the chart is going to see a reaction. Make sure to check out our online Slack trading chat group with proven results of 86% win rate out of 318 successful trade callouts. Free to join, limited spots on each enrollment period. Link down in the description below. And hey, if you know anyone that may benefit from the content we provide, please consider sharing our channel. Thank you for watching. I will see you in the next video.